Morning. Welcome to day 12 of trading Momo strategy in the simulator. Let's check out what we got today. ASPP sold off. BIT. Everything else is cheaper. Or higher float. S&P 500 is nearly back at all-time highs again. So it doesn't look like we have too much on watch right now. We're gonna see if there's news at 7 a.m. here. But we're gonna talk a little bit about my plan while we're waiting here. So if any of you have been following either Ross or the SEC, it's been confirmed that the pattern day trader rule will be changing in about 45 days. So I think at the end of May, at the beginning of June. So that creates a bit of a timeline for me now for when I want to be proficient in this strategy and be able to trade, because it's very likely that the change to the pattern day trader rule is going to bring a lot of volume into the market, because there's going to be a lot of traders in the United States that aren't subject to the pattern day trader rule of $25,000 anymore. Now that's going to be going down to $2,000, which creates a lot of accessibility for people who want to get into trading the market. You don't need a huge account to get a direct access broker. And there are a lot of people in the United States who aren't comfortable with offshore brokers. So many of them just kind of wrote off trading. I have a couple of friends who got into trading a little bit, but then they realized that they couldn't transition past a sim without dealing with an offshore broker. So they just gave it up. So now there's going to be a lot of people coming into the market in June, which is likely going to heat things up again from this cold market. So I expect things to pick up by then. Which means that it would be the best time to begin trading with real money to get a head start while the market is hot. The second thing that I need to talk about is the fact that I had 2 losses in a row between yesterday and Monday, which puts me in trader rehab today. So, as my title mentions, we're going back to basics. I'm trading Ross's strategy, breaking news, high day squeeze. And I'm not going to be trading at the open today. And we're going to wait for something that pops up and looks good, that I have conviction that I can make money on. If there is a setup that's really obvious, then I might trade it. But mostly breaking news or 5-day squeeze setups with news. And I have been watching my archives as well, and some live trading archives to kind of simulate in my mind the best way to buy these breaking news and 5-day squeeze setups, and how I can add to positions and scale in and scale out. So I'll be practicing that a little bit as well, hopefully, so that I can take advantage of the winners when they pop up. Because that is also a large part of Ross's accuracy, is the fact that he constantly scales in and scales out of trades. So one opportunity on a stock might give him 2, 3, or 4 winning trades. We'll have to see what happens today. But the name of the game right now is a significant improvement of my accuracy. My profit loss ratio has been good. It's been 1.5, so it needs to be at least 1 to 1. 1.5 has been good because I've been cutting my losers quickly. But now, because I'm having tighter stops, I get stopped out more, so my accuracy has been lower. So I need to focus on finding good entries, good setups. And I just have to wait for something that looks good. We're chilling out right now. Not really anything too interesting. The leading gainer for the day is IMMP, which is a 100 million share float. And it's below $1. This isn't something I can trade because it's outside of my strategy. AGAE is the same thing. Higher float. Popped up after hours, came back down to VWAP. But it's below $1. I don't trade these. Similar to Ross. Eventually there will come a time where it's not useful to trade these. Assuming that I can scale my account up to a large size, I would have to take significant size just to make any money on these. And when at a certain point, there becomes diminishing returns where you get slippage on your entries and exits. You take too big of a size. I want to trade as though, like, I am simulating for $1,000 account, yes, but I would like my strategy to work scaled up as well to a bigger account size. We'll see what happens. When the PDT rule changes, I would like to switch to a US direct access broker. I hope that as soon as the rule changes, many of the brokers are going to adjust their required account size parameters so that I can get in with a good broker like Lightspeed or one of the other good US brokers that have fast direct access routing. Because I don't really like Trade Zero that much, but it's it's the best of the worst for Canada. I might also consider Centerpoint if it brings down its $25,000 account size requirement. Centerpoint Canada. I would have to kind of review the brokers and make a decision based on what my best options are for a Canadian getting a direct access broker. And although I will be able to trade with more than $1,000 whenever I create a broker at one of these brokerages, with the new PDT rule requiring 1,000, I'd probably fund it with maybe 3,000 US dollars just to stay a little bit above the rule. I would still only trade as though it were $1,000 account size for a little bit until I become comfortable with the broker and I become comfortable trading with real money again and ensure that I'm not going to just lose all that money back. But right now, we're still trading in the simulator for a little while. I may not wait until June to switch to real money. I still have my Trade Zero account. It's possible that I should switch back to real money for a little bit before the PDT rule change, maybe sometime in May, to get a feel for trading with real money again. But that's my morning recap. So we're just gonna be patient. There's nothing that I'm really watching right now. Everything's either sold off too cheap or has too high of a float. So what we're gonna do is we're just gonna read on my phone. I'm not gonna get sucked into any trades until that has news. There is one thing I have been noticing recently with trading is that the best setups tend to have this sort of pattern on the 10-second where they kind of trade horizontally like this, where they follow the 9 EMA on the 10-second. Seems like it's some sort of algorithmic trading almost. It is a Chinese company, so it could be artificial, but generally speaking, like when you see that it's following the 9 EMA like this first pullback would have been good to get in on a dip, riding it from 75 all the way up to 92. The age of pennies. Look at that. Would have worked from 90 cents all the way up there to 115. 25 cents on a sub $1 with my particular strategy. I would take like 500 shares of this. 500 shares, 30 cents. 150 bucks. Yeah, I'm torn. I'm torn. Like Ross says, at a certain point, if you trade with a big enough account size, they're almost not worth it because you, most of the time on your exits and entries, you're trading with such big size that you get 2 or 3 cents of slippage and you're only making like 5 to 10 cents on them. And then you're also paying a ridiculous amount in commissions. So I want to trade as though my account size is bigger. Like I want to be able to scale my strategy, but at the same time, like here, they're making such big moves that if I had gotten in at 90 and I just rode it all the way up to 120, then it's a lot of money. Right? Like I wish I was trading with $100,000 account, but we get there when we get there, I guess. So like I try not to touch these because yeah, like I understand the reasoning why they're not good. He doesn't make much money on them. So I've just never bothered to touch them. But the more I see these go up 30 cents, it's like, well, are we missing out here? Like trade pennies only while pennies are the theme because they're clearly a theme, right? IMMP higher float up 149%, AGAE up 116%, 71 cents. VSA up 89% here. Like the whole top, most of the top 10 gappers for the day are all pennies. And then for the past few days, every time a penny's come out with news, it's gone up like 100%. It could be a way to look at it. Don't trade pennies unless it's a theme. Yeah, it does. Like it's a super obvious bull flag here. Pull back. For me, this is what I would call a test of VWAP. Pulls back, tests a VWAP, fails to break down, forms an entry candle. I would get in for the high, which is 90 cents, looking for the break up back to either high of day, which is like 95, or like break through $1. In hindsight, it looks like easy money. Especially like back here, I was mentioning earlier that whenever I see this pattern, this type of horizontal price movement, where it just follows the 9 EMA like this, it's usually pretty safe to get in on the first and like second dips for the move up. If you get in down here at 75, ride it up to like 90 cents, sell for the first pullback, retest or test a VWAP, comes up, buy top of the first candle to make a new high here as it's testing the 9 EMA again, and then it just follows the 9 EMA all the way up. Here, false breakdown, comes back up all the way up to the top here. Yeah, right now after making after having 2 red days in a row between yesterday and Monday, $150 for my strategy, 90 up to 120. It sounds pretty nice. I agree with that. We have a kind of a dragonfly forming on this 2-minute here. I think you asked me a question. I think it was you that asked me a question about why I use the 2-minute. And this is a good example of why I use the 2-minute right here. Kind of got multi-time frame alignment here, right? 5-minute close. So that's the first pullback. It just closed. We have a kind of a dragonfly doji on the 2-minute, which kind of solidifies my entry here, 113 up to 130. On the 1-minute, it's like a false breakdown, right? Like it closed below, but then it came back up. First candle to make a new high. But you can see it clearly on the 2-minute. Yeah, he is a little bit fixated on making a significant amount of money. Like maybe it's small money to him, but it's still like that's a lot of money to other people. It doesn't really fit his strategy though. Like he can't get in and get out. Like he has to hold. And I don't think he particularly likes holding through moves. Like here he could get in, I guess, for 115 up to like 125, like 10 cents. He traded with 50,000 shares. That's still $5,000. That's not bad. Yeah, I'm not sure actually. I'm not sure what his mentality is. I know that his mentality, like his ability to stick to his rules, is what makes him a successful trader for sure. But it could also be a limiting factor too if he's inflexible. Like his inflexibility is a strength in its own because it keeps him from having big drawdowns, which is the characteristic of a profitable trader. But I'm still like on the fence about whether or not having flexibility is better than not having it. Like if you have too much flexibility, then you start bringing your own emotions in. At a certain point, if you have too much flexibility, then if you start losing, that's when not having rules can be detrimental. Yeah. He said he has traded pennies in the past. Like he has a course on pennies, I believe, in his education portal, and he's traded them before, so it's not like he doesn't have experience trading them before. It's not like he's never traded them. And he found that he doesn't make as much money trading them as he does trading other things. But that's a sample size over a long period of time. I do wonder like if he just traded them during right now while it's a theme. It's clearly a theme. If he would make money on them. Also, I'm sure he like back when he traded pennies, it was like probably several years ago. Yeah, I mean, that's right. Like who at the end of the day, I'm the one here trading in a simulator criticizing the man who's made multi-millions of dollars. So he might see he might see something differently. He might see things differently. But I also think though like with this new pattern day trader change, revising it down to $2,000, that's going to bring a lot of retail traders into the market, and retail traders love to trade penny stocks because many of them don't have the capital to buy higher priced stocks. And you can make a lot of money on penny stocks with small account size. Like today, if even if you like with the $2,000 account, if you just put all your shares in at 90 cents for a $2,000 account, you buy 2,000 shares, write it up for 20 to 30 to 40 cents. That's a lot of money. Or if the stock just happens to go parabolic and it goes up $1 a share, that would be an interesting watch. Maybe someone could suggest that to him. Testing his new simulator, but at the same time while he's testing it, just go ham. See what happens. KIDZ popping up again, but this is the stock that was super choppy before. It's likely still got the same levels as it did previously. Got yeah, so not really any interesting news at 8:30, sadly. Maybe while I'm still in the simulator, it would be okay to at least test pennies during the theme. I'm not trading this up here, but if I see another penny pop up that has this sort of pattern, sort of horizontal trading pattern, I might jump in. We'll see. But it has to have news and has to have a clear pattern. I can just set them aside in my metrics as like a test. Yeah, I could always either like I have the option either just delete the trades from trader view, or I can filter them out when I'm looking at my stats. Um, the only thing that would potentially affect my stats would be if I end up holding a penny. So like VCA, I would probably apply my theory of exit indicators for this one, which means that I would be holding from 90 up till about here where we double top, so up to 120, which means that I'd be holding for 1, 2, 3, 4, 5, 6, 7, 8, 9, like almost 10 minutes. So if another stock pops up while I'm holding, I don't trade multiple stocks at the same time. So it could potentially affect me getting into another stock if something pops up while I'm in the middle of this trade. It's the only issue. That is true. I have never touched a stock below $1 before. Never. Not even once. If it's not above $1, then I don't touch it. So I've never tried it before. I have traded $1 stocks before, but not like sub $1. Because I never liked uh if I go to AGAE, you see how my level 2, it doesn't, like, it's what do you call it? Like, it's accuracy. Like, I don't have 4 decimal places to show. So if I get in, like, I'm guaranteed to either make a cent or lose a cent on it because I don't have the increased accuracy of showing like it's 7078 like it is here. So I don't know. I was never comfortable trading knowing that there was more information that I should have, but I didn't really want to change my level 2 for it. Precision, I think, is what it's called. The precision, the 4 decimal precision. And I know that pennies trade in 4 decimals. $7.45. Is there anything that's going to pop up? Let's see. We hold the 9 EMA here on the 10-second. Nope. It breaks through 130. The MACD would probably go positive here, and then it would retest high of day, which is 134. Struggling though. Hmm. Closes with a topping tail like that though, then this is probably just stair stepping down. It'd be better to get in a penny that's fresh rather than all the way up here, but if I'm treating as an experiment, then I wasn't ready for that popping up like that. But I did say that 130 would be a trade up to retest or break. That would have been 10 cents. We're just gonna wait. Wait for 8 a.m. Don't really want to get in a trade with 8 minutes to 8 a.m. And if I were trading penny stocks for real, like I was actually trying, I wouldn't trade it up here. I think if we're going by Ross's definition for thickly traded, all penny stocks are thickly traded. For a penny stock, like relative to each other, though. I don't know. I don't really have the answer to that either. I would say that I would agree with Ross in that all penny stocks are thickly traded and they grind. All of them grind higher, right? Um, but I think this price action, at least at the beginning, is a lot cleaner compared to some other penny stocks that I've seen. Yeah, there's so much volume in a single candle that for sure, like a 50,000 or even a 500,000 share seller, like that's only a fifth of the volume in this 1 minute candle, the buying volume. Yeah, I don't really know either. You see 40,000 on the ask, 40,000 on the bid. That's probably a good question because Ross mentioned before stocks that he feels like he has an edge on. And he said that I think if I remember correctly, he said he doesn't feel like he has an edge on pennies because when stocks are thickly traded like this, he can't he can't really apply, like he doesn't have as much edge because it's hard to read them. And he's really good at reading level two. But if you can't read level two because it's stacked on the bid and the ask, then you're kind of just going by the charts alone. So it reduces your edge in a certain sense. For sure. We're coming up to 8 a.m. in 3 minutes. Hopefully we get some news. Like we have NCI popping up now, another penny stock with a higher float. Considering how thickly traded penny stocks are anyways. NCI. Did I break it? Or can I? There we go. I wonder if higher float even matters. I mean, it does matter because supply and demand, but like you still see this high float penny stock going from 54 up to 87, even in the 17 million share float. It's this pattern again, though. It follows the 9 EMA. Like it just tightly holds it. Like if I were to look here, let's see. Okay, volume is too light. Okay, volume is increasing. Okay, it's testing. Probably get in for the break of 65. I would see that significant selling and I'd be like, yeah, it's kind of scary. But it still holds. If you get in for 65, where would your stop be? If you have 500 shares, you would have to have a really tight stop. You'd have to be like 3 cents or something. 65 stop of like 63, maybe. The 65, and then you kind of write it up. FCHL popping up. It's kind of funny how this one had less volume than FCHL, even though it has a higher float. LRHC popping up. I don't want to get into a penny stock if there's going to be something that I actually can practice my regular strategy on at 8 a.m. $200 EMA is up at 5 on Bird. Executes 50 million convertible financing ability agreement. Has the acquisition at 6 a.m. Preliminary proxy statements. They don't drop like a significant amount, but relatively speaking, since you have to take bigger share size, even if it drops like 5 cents, that can be significant because if you're like, for me, no, Bird is interesting enough. For me, if I get in like LRHC with 500 shares and my intended stop is 3 cents, but it suddenly drops down like 7 cents. It's like double my stop. 7 cents with 500 shares is like 35 bucks. Relatively speaking, that's quite a bit because my max loss is like $50 right now, which is 5%. Like right here at 70, it dropped down to 65 in a single 10-second candle. Like 5 cents on 500 shares is 25 bucks. It's half of my max loss. The way I'm calculating that is based on percentage of like what you can make. So like if you're on average in one of these stocks gonna make like 5 cents on it, then you have to have like a 2.5 cent stop. Like I would say that on average, like right now we're in a theme, so the risk reward ratio is a lot higher. But normally, like if you get into one of these penny stocks, you can reasonably expect it to move 5 cents. So that means your stop has to be 2.5 cents. But if you have candles that are dropping down 5 cents and then you have slippage, then your risk reward ratio becomes negative. If you're looking at just a regular $1 penny stock, then you can reasonably expect that to move maybe like 10 cents, like 5 to 10 cents. So then your stop is 5 cents. But in a penny stock, those can drop down 10 cents in a single candle. $2 stocks are like 15 cents you can expect, 15 to 20 cents. $3 stocks are like 20 cents, 25 cents, and so forth. And then for $5 stocks and above, then you can expect those to move like 40 to 50 cents. That's how I've experienced things, at least. So once again, just keeping an eye on these pennies, this would have worked for this entry candle right here from 66 up to 77. 50 bucks on a 500 share position. If I trade with max size and I trade like 1,000 shares with $1,000 account, that's like 100 bucks. This would be kind of like a bear trap setup. Drops below and then immediately comes back up, engulfing the previous candle. First candle will make a new high. Retests here, you buy as it holds the 9 EMA at 66. My theory of exit indicators would be it'd still be holding. I could come up here, maybe I'd take some profit, have profit at 80. I'd still be holding here for a double top. Wait for it to come back up to 85. If it double tops, then you sell. Yeah, I was curious about that. Um, about those huge drops. Like, what would realistically happen if you just held going up? So there was once a time, like probably about a month or two ago, that I sat down and I made an Excel sheet where I went through setups around VWAP. So if I like getting in around VWAP, this would be one of my bear trap setups. So if I got in at 66 around VWAP, just kind of close to support, how often, like what would you make the most money on? Holding through up to until you see an exit indicator. And the four exit indicators I used were double top, shooting star, MACD crossover, or high volume selling. So those are the four exit indicators that I used when I made that Excel sheet. So I did that and I compared to just taking profit for like first candle to make a new low. Like you take profit first candle to make a new low, or just like trading normally, like the way Ross does. And I found that actually for those setups in particular, most of the time you make the most money just waiting for an exit indicator. Like if you hold through and wait for an exit indicator, not barring what Ross does where he trades parabolic stocks and you just scale in and out constantly with bigger and bigger size as your winners are expanded. I found that a lot of the time you make the most money if you wait until one of those exit indicators. So right now it's kind of double topping here. So this would be where I would sell. It's possible that it breaks through here, but just the fact that I held from 66 up to like 80 up here, even though it came back down, it usually comes back up once more to retest before traders decide that, they're not interested anymore. It's kind of like the when you reverse it, like a double bottom. If you see a double bottom, usually if it double bottoms and then comes back up through VWAP, then short sellers might end up capitulating. Like double top, double bottom. Or if it goes sideways long enough that MACD goes negative, then you want to sell. If you see a shooting star or high volume selling, then that means that there's heavy resistance up there, so you want to sell. So although it's not unheard of that it could drop down and then you just lose all your profits back over a long period of time. I think I had a sample size of like 100 or something, 100 trades around VWAP. I found that for the trades that I sampled, at least, I would make the most money just waiting until an exit indicator. That's just a theory, though. Like that's not verified. That is something that I'm going to try to apply in some of my trading. I was reviewing my metrics and going through some archives the other day and kind of simulating in my mind how to trade certain breaking news setups so that I'm like prepared for when they come out. And what I'm going to try to do is I'm going to try to identify whether the price action is grindy or it's parabolic. And if it's grindy, then I stop trying to scale in and out and I just hold for the theory of exit indicators, my theory of exit indicators all the way up until I see one. If it's parabolic, then I scale in and out like Ross does. We'll see if I can apply that and I can get some examples in the future. I haven't really been doing that very well so far. Birds curling back up here. Yeah, that is true. That is true. Hot versus cold market, I have two separate strategies for them because of how different they are. Like my VWAP strategies in this cold market, they just haven't really been working. T-Raw pops up and then sells off. Have some volume coming back into this. It's struggling a little bit up here at 320. Even level 2 recently has been difficult though because the people deploying these short selling algorithms, like the Memex seller that constantly pops up with 50,000 share positions just sitting on the ask. So it's like it's hard to tell whether or not they're going to keep it there and it's going to end up being a wall or they're just going to pull it away. I don't know if it's just me though, but I feel like that Memex seller pops up on like almost every stock. I don't see it here yet, but probably if this breaks high of day and starts stalling out, we're going to see it pop up. So It almost feels like trading, uh, keeping yourself from trading, that short selling algorithm is popping up is eliminating 90% of your choices. That's what it feels like anyway. Maybe that's the way to go though. Like in a cold market, just 90% of stuff you just ignore. Feels like that's the way it is anyway. There's nothing to trade here. We're triple topping at 320 now. I haven't seen the penny or the short selling algorithm on the pennies though. But I haven't been watching the pennies that closely either. Maybe they're just getting drowned out by all of the other sellers. Yeah, I think last time he pulled up his accuracy was like 70% overall. That's including like January and February. The market was a bit hotter. It might have dropped down to like below 70, like 69, 68, since he had a couple of like bigger losses recently. But he's still like really accurate. Popping up here. So I'm looking for dip at 325 potentially. Break through 350. I'll take a position at 353 looking for the squeeze up. Take some profit up at 390 for the pullback at 75. Looking for the squeeze back up to, or the pop back up to 4. Set a couple of profit targets. It seems like we have a bit more selling here. I'm going to scale out. Just wait and see what it does. Got a topping tail on the 1 minute. It looks like we're stalling out here, so I'm just going to take the rest. I was hoping we would have a bigger pop there on that pullback. So I bought the pullback there at 75. It only popped up like just barely to 80. Yeah, that was a nice trade. It's coming back up here, but considering topping tail at 4, I don't know if I want to get back in now. But here's kind of like that theory of exit indicators at work again here though. Like even though it dropped here, right? Like it dropped from 4 all the way down to 350. It still came back up once to retest and double topped around 4. 392, 396. So you can still like if you get in for the break and you wait for an exit indicator, like according to my theory, right? Just my theory, my hypothesis. You get out, like you can take profit where it starts fizzling out, like you take half or take 3/4, and then you wait to see what it does. If it comes back up and fails, then you take the rest at like 385 as it's double tops and comes back down, and then you wait for another re-entry. That's just my theory. Like I'm not applying that theory right now by any means. That trade I just took was first pullback after a fresh breakout, high day squeeze. Buying at 350 for the squeeze up to 4, and then just scaling out as it fails. Breakthrough 4. I'll take a position. I filled a little bit high there, looking for the squeeze up. Take a little bit of profit. We're stalling out a little bit. Take a little bit more profit up there. Didn't get filled. Minute candle just closed. Head back there, looking for the squeeze back up. Scale it a little bit more because we drop back down to 50. See what it does. Expected to pop back up to 78. But if we close with a shooting star there, then I have to get out. I'm just going to take the rest off. A little bit more there. I didn't, I felt a little bit high. My first entry was at 414. Took a little bit of profit too soon as well because of this topping tail. We got a little bit of a cushion now. 33 bucks. It's 8:30, so there might be some fresh news. So I'm past my $25 daily goal, which means that I can trade with full size now if I want to. But this is probably, we have to wait for another pullback on Bird to be able to consider it. But we're looking for another stock here. 8:30 news. So here as well, the theory of exit indicators was correct. Shooting star on the 2-minute, kind of a shooting star on the 1-minute. So get in at 4. You can take some profit up at like 450, 475 or whatever as it comes back down. 475 maybe. Sell the rest is at 450 as it closes as a shooting star, and then wait for another re-entry. I think I will admit that I took a little bit of profit too soon here. The first half, I sold half for 13 cents a profit. Like it did kind of almost reject off of 450. So I took some profit in case it came back down. So I don't know if that was the correct move or not, but I feel like that was kind of an emotional sell there. Selling half at 427 on this topping tail. Like if I had waited, for example, if I had actually applied my theory of exit indicators, then I could have just waited for it to come up to 450 for me to sell half. And then I would have been up a little bit more on the day. But there's still decent trades. Now we're stair stepping down though, so gonna have to wait for something fresh. One other thing to note, I guess, would have been that the 200 EMA was up at 5, so as we approached 5, that's why it rejected, most likely. All the way up to 478. So maybe it wasn't a good idea to add here, although you could argue that it had room to 5. It could have popped up to 5. We were approaching the 200 moving average. I think part of the other problem that I have for like discipline is whenever you make money and you have good trades, you just want to trade more. Now I'm antsy. Now I want to trade more, but I have to find the Zen zone, calm down. Trading is over. Trading time is over. Now we're back to waiting again. The fun is over. Back to sitting around for another 20 minutes or an hour or 2 hours. Let's see how the S&P 500 is doing. It is good that we're back to all-time highs. I wonder how long that's gonna stick around for. I wonder if the PDT rule changes affecting the S&P 500 at all. I'm guessing that it won't. It's probably not very significant. It's been going up anyways. Because, I mean, retail traders are such a small fraction of traders in the market. The PDT rule is mainly for retail traders. So big institutions probably don't really care about that much. I'm gonna guess. There's a penny I can't trust. Ugh. Back to reading. Nothing at 8:45. Bird curling back up a little bit, but I'm not trading curling patterns in this market. I've been working very well. It turns out this one would have worked for like 20 cents, but not something I'm interested in. 20 cents isn't enough. Oh, that's significant capitulation there. Through a new high of day. Previous high was 478. Breaking through 5. We're holding, so I'm going to take a position there. Top of 5. Broke back down. Significant topping tail. That curling pattern would have really worked there. Hmm. The dip at 30. The squeeze back up to 50. feel like we're gonna bounce off of the 20 here and come back up. I have to take the loss. That was a bit of holding and hoping there. FOMO on the squeeze up. Get in at 535. I get in too high, take a loss. So 848. $48.30. I got in right as it rejected here. I get the top almost. Or drops back down below 5 and I sell, and then it comes back up after bouncing off of the previous high. So that triggered me a little bit. Got in at 530 for the break up through 550, expecting the second pullback. Flip from $30 green to $20 red. It's not good. That's what I call complacency. This is why we're still trading in the simulator. I got complacent there. Broke through and I wasn't paying close enough attention to making a good entry. So I just got in at 5 at the top of this candle here instead of waiting for a pullback. Instead of waiting for a proper micro pullback, I could have taken a micro pullback down here to 570 for the squeeze back up. Triggered me getting in as it's squeezing up again over the previous high at 530. I don't take profit as it comes up to 550. And then it comes back down. And I expect this to be the second pullback. But since it's not the second pullback, after a fresh breakout, so first pullback, second pullback, I held and hoped expecting it to come back up as a second pullback, back up to 550. I was trying to apply my theory there as well, my theory of exit indicators, expecting it to come back up and retest one time. But by the time the 2-minute closed as a shooting star here, it already dropped back down to 5. So that's not really a theory that I can be applying in the middle of a high of day squeeze trade because I got in too high. It would only apply if I had gotten in down at VWAP. I don't know why my warrior trading is sometimes logging out on its own. Log back in. Check my stream, make sure that's fine. Yeah. So since this wasn't the second pullback, I ended up giving back all of my profits. The reason why I held in hope there was because I knew that I would flip from green to red after being a bit proud that I had traded well on the first time. So that's my pride getting to me there. Instead of just taking the loss, going back down to break even, end up with a $20 loss now for a third loss day in a row. Potentially, unless we break through 550 here and I can make it back, but now this shows that my discipline is slipping. Take a position looking for the squeeze up. Break 6, I'll add. Take some profit at 20. Scale out a little bit more. We've got that topping tail in the 1 minute, so I'm just going to take the rest. We are creeping up here a little bit, holding the 9 EMA. So the reason why I didn't take that trade there is because my emotions are getting to me a little bit after that horrid trade back here that I took, and the fact that I just flipped back from red to green again. This would have been a good trade from 650 all the way up to 750, and if I were trading with full size, then I would be up a significant amount on the day right now, but I didn't take it because I was scared of flipping back from green to red. And this is in the simulator. This isn't with real money. So that's something I have to address for sure. It's not good. Get a win, get complacent, fail a trade, flip back to red, get emotional, go back to green, miss the biggest trade of the day, 650 up to 750. If I traded with full size 150 shares, I would be up like $200 right now on the day. And now I have to acknowledge that I'm triggered, so it's almost best if I just don't take any more trades, because it's already 9 a.m. This is the part that I'm struggling with the most. That's probably the first time, though, in my 12 days that I actually let my discipline slip, like by a significant amount there, back here. But this is why I'm sharing my journey and why I'm trading in the sim. I can see the setups clearly. I know the strategy, but the order in doing things matters so much in trading. This one slip up here, seeing it rip all the way up and not waiting for a proper pullback to get in close to support, caused me to get triggered. If I had taken this trade around here, like here, down at 470, or the second time after I saw it hold the 9 EMA and this level of support for the break back up over 5, then I probably, like I would have taken profit up here at 550. On the first pullback, I might have added, but I would have scaled out as I saw that it was failing instead of holding and hoping. So that would have put me more in the green. I would have been up maybe like $50, $60 green. Then I would have been trading with full size as it came back up over here for this breakthrough. It breaks through, pulls back, 650 all the way up to 750. $1.50 a share on 150 shares is like $200. Well, it's like 175, but or is it 150 shares, 75? No, it is over $200. That would have been up like $280 on the day. That's significant. It's really significant. We're up 171% on the day now. First time that we've had a stock with news actually pop up this much and give this many opportunities. And you can see that my discipline has just completely destroyed the day. I don't think I'm going to get in up here. I think we're overextended on the 5-minute. We have 5 green candles in a row. And we got a shooting star forming, or gravestone doji. That's a gravestone doji. The 1 win, 2 win, 2 losses. That's 1 win, 2 win, 1 loss, 2 loss. Three win, 2 loss, 60% accuracy. But my losers was bigger than my winners. But still green on the day, so I guess I should be grateful that I'm green at all. But as you can see, guys, I'm not an expert, not yet. Only up 17 bucks on stock, up over 180%. But this is a lesson not to get complacent. So I have to drill this into my mind. So we're gonna chill out, find my Zen zone. I'm gonna read in my phone. Probably not going to take any more trades, considering that fiasco that I just had. It's only 17 minutes to the open. I'm actually not sure why I didn't get in on this candle at 450 either. I know I said I wouldn't trade curling setups, but this would have been a high day break setup for my high day squeezes, because this is a candle with significant volume coming back up to high of day as a green bodied candle. So I could have gotten in for the break, sold all the way up at 550, gotten in for the break, taken profit at 530, bought the dip. There's just so many things I could have done differently here. I would have resulted in me being up significantly on the day instead of just being barely like break even. Instead, I kind of got complacent. I just ignored the curl. I ignored it completely. After it squeezed through, I got FOMO, got in too high. So what I'm going to do is in the live archives on my channel, instead of marking this as a green day, I'm going to mark this as a fumbled day so that I can come back and watch this. All right, I think I am going to call it here. I don't want to take any more trades while I'm emotionally compromised. So I'm just going to be grateful that I recovered back from red. I'll take that as a sign to stop. This could have been a significant green day, unfortunately, but we fumbled it. But we're going to come back tomorrow fresh, and I got to remind myself of what happened here today so that the mistake doesn't happen again. But I thank everyone who watched today. And I will see you guys at 7 a.m. tomorrow. Take care.